Hey everybody, it's Chris with Hotspot Metals in Chicago. As promised, I'm logging in just to talk about some economic reports that are coming out tomorrow. And we're going to make this real quick, interesting as possible because it's a little bit dry toast for a lot of people. But hey, super boring in the market today. Gold and silver went basically nowhere, just kind of drifted along. So we're going to take these times to just, I guess, improve our knowledge of the kind of jabber we hear on the mainstream media. Different economic reports, things like that come out. Some of these things have come out for years, and I really did not know what they mean. So I'm just going to take the opportunity as these reports are released every morning, explain a little bit to you, real high level, what they're supposed to mean. You know, if you're into games, why not play the game of life? I mean, we've all got a little bit of stake in this. We live in the United States or countries that are affected by the United States, and these economic figures are part of the big game. So let's play. Anyway, what do you think of that consumeranity coin from Golden State Mint I showed at the beginning? I don't sell Golden State Mint products. I don't sell anything on here yet. But I did buy that particular coin back in February for $19. And as usual, I got one for myself, two for my boys. And now on Golden State Mint, you can't even get them. They're not available. It's part of their mini mintage series. I highly recommend it. I don't know these people. I don't get anything from these people, but I really enjoy their coinage. It's just kind of unique. I did a quick search on eBay just a minute ago, and that coin, I forget. I think they only minted 1 or 2,000 of them. That's the way they roll. That's their business strategy. They take a really unique design, take orders for it, and they only mint what there's orders for. Now on eBay, you can't touch them for less than $30, and this is just a month ago. So I'm not going to sell mine, but if I did, I would go to eBay and I would probably sell it pretty quickly. Check out Golden State Mint, free advertising. Thanks, Golden State Mint. But just for you people out there to know, I don't make any money. I just try to give you a recommendation for something fun to do while gold and silver do nothing. And I don't think they're going to do a whole lot, at least until Wednesday when we get the big Federal Reserve committee meeting report. So they could raise rates, leave rates the same, drop rates, which I think would be really great for gold and silver. But anyway, we're going to talk about reports that come out tomorrow morning. Let me get to it, get past this, so you can all get back to whatever you're watching on TV tonight. I'll probably go do the same. Anyway, let me get on my Walgreens readers here. Where you're going to find this, economic reports, is in the live charts link on hotspotmetals.com, and you got to scroll all the way down. This is the reason why I put everything on one page, because I don't like hopping around a lot, whether I'm on my phone or my desktop or whatever. But the economic report calendar will tell you what's going to be announced in the morning. And here's the way the game goes. You log into hotspotmetals.com live charts, and you watch gold and silver and see how whatever these things come out to be affect the price of gold and silver. And a lot of them over time have a cumulative effect. Some of them have none. This morning was a NAHB home builders report. The forecast was to be up, or to the index to be at 63. It was at 62. It stayed at 62. So I guess for that little bit of extra excitement or encouragement for our home building friends, it just stayed the same. Nothing great. Over 50 is positive, so that's good. And why do we even care about any of this stuff anyway? Oh, well, maybe I have friends who swing a hammer or throw a wrench and build homes. Maybe I have some friends that sell real estate, some that invest in real estate. These are the people in our neighborhood. And so that's why we watch these economic reports, because it's a game we're all forced to play. So tomorrow morning, what comes out is a thing called the Redbook, month over month and year over year. Let me just switch to my high-tech PowerPoint presentation. I don't know who Mr. Johnson is, but Johnson puts out the Redbook Index every Tuesday of every month. And what they do is there was a report on the 12th of March, and now we're having one tomorrow on the 19th. So the month-over-month report looks at the retail sales levels from the same week a month ago. Got that? Year over year looks at the same week last year. So what it includes is general merchandise and apparel retailers, and it's the 9,000 largest retail stores in the country. I imagine these are all the big boxes. Same store sales. You hear that term all the time when they talk about same store sales were up, same store sales were down. These are existing stores that have been open for more than a year. They seasonally adjust these figures so that they can get a smooth figure. They smooth out the numbers. Last report, March 12th, it was down 0.3%. Not a whole lot month over month. Year over year, actually, it was a stronger retail week than the previous same week last year. The report's out tomorrow morning at 7:55 Eastern Time, both the month over month and the year over year. See how fast we're going? I'm going to go to the durable goods order. Now, this one is supposed to be a lot more important than the Redbook report. The durable goods are new orders received for items that last 3 years or more. Think refrigerators, washers and dryers, cars, things like that. This does not include defense spending, and it's legally binding contracts between a consumer and a producer. This would include cars. This indicates future industrial output and production requirements. Why do I care about that? Well, maybe because you or one of my close friends happens to work in a manufacturing facility, whether they're warehousing or making things, running a line. From top to bottom, we all know a lot of people connected to manufacturing. So we want this to be a good number tomorrow. And frankly, I know a lot of people are hoping for a big crash, and they think that silver and gold's just going to skyrocket when people are running around in the streets screaming and begging for food. That's not really what I hope for. What I hope for is a lot of economic activity, a lot of industrial activity, because those activities consume what? Metals. Any kind of electronic device that people will buy, it puts more money in their pocket. Anything you buy, TVs, solar panels, any kind of electronic device, they all have an amount of silver in them. So we want to see industrial activity. And I think some of the reason why silver has been down a little bit is people are concerned about industrial consumption of silver. They're not thinking about it as money. A few of us are thinking about stashing it away because we feel like, well, it's definitely an inflation hedge, but it also has industrial use. Years and years of low production and declining ore grades have made the supply of silver a lot lower than people think. And if we have high industrial capacity using up a lot of that silver, we'll see a kind of palladium move like we're seeing right now, where it's just gone up a crazy amount. Palladium's more expensive than platinum or gold. Okay. Continuing on, durable goods order. I'm going to get through this fast for you. 89 categories within 473 manufacturing industries. These are companies with 500 million or more in annual shipments. This comes out at 9 a.m. Eastern Time. Last month, it was up 1.3%, and they're not posting a forecast for this month. Let's hope for a higher number on that. Let's not cheer for lower numbers, waiting for the apocalypse to come. Anyway, a weak durable goods report, if it is weak, will generally lead to a decline in the bond market. When the bond market goes down, this could also be good for gold and silver. It'll have a lot to do with consumer confidence. This is a leading indicator. Some indicators are leading and some are trailing. Leading, of course, looking forward. Trailing indicators are what happened in the past. So this is a leading indicator. It's full of estimates. They're often revised after they come out, but it is a clue, and it's all we're looking for here is clues, right? Which way are we going? Another biggie tomorrow is the factory orders month over month, and this includes both durable and non-durable goods. Non-durable goods being things like clothing, footwear, medication, cosmetics, and cleaning supplies. These are all orders from all factories in a large sample set. Last month, it was up 0.1%. That doesn't sound like a lot. It is forecast to be up 0.3%. Maybe that's good for month over month over month. When you see that number come out, compare it to 0.3% forecast. What's made the markets move and what's made gold and silver move lately have been when we've wildly missed or overshot or undershot whatever was forecast for a certain metric. This also comes out tomorrow, 9 a.m. Eastern Time, and that is about all I think anybody could handle when it comes to learning economic reports in one night. But I'm going to keep doing it. Even if you hate it, I'm learning it myself, and the best way to learn is to try and teach. So until tomorrow, next time, the big one we're going to look for is the Fed funds, or the Fed committee speaking on Wednesday. The Federal Reserve meets tomorrow, and then they start coming out to the public on Wednesday. And that will probably be the most likely market mover this week. Anyway, it's Chris from Chicago, hotspotmetals.com. Please click the subscribe button, would you? I will see you probably sometime tomorrow. Maybe tackle another economic report. Try to do it fast. Try to do it sweet. Have a great night, and I'll talk to you tomorrow.